sit in failure for too long, you will never come out of it. So the first part of my success was learning how to fail properly. You have no fucking idea how great you really are, because you are using such minimal of what you have. It became a way of living. So how I do every day is how I do every day. It's a discipline, it's a regimen, it was a choice I made. And the choice I made was, what are you willing to sacrifice, and what are you willing to give up to find every bit of who you are as a human being? And I was willing to give everything to do that. But when you put that practice in, every day you lace them up, and I don't mean run, it's just a metaphor for life. When you lace them motherfuckers up every day, pretty soon you win. Pretty soon you'll fucking win. If you have the courage and the heart and the dedication and the mindset about everybody can go fuck themselves, the heck is gonna fucking suck. And that's what I realized. Life, that's why I wanted to come on here today. I didn't want to come on here and talk about no fucking passion and purpose and how to get the fuck out of bed and how to hit a fucking alarm clock and all this catchphrase bullshit. Because that wasn't how I lived. I woke up like every human being does and goes, fuck, man, I'm a fucking piece of shit today. How the hell is this gonna work out for me? And you fight that. You don't override it. There's no override button. It's the conversation in your fucking, in your head. So how do you do that? We don't have enough of these conversations about the real conversation that every human being is having. And they have no idea how to get out of it, but they do. It's that shit right there, man. You gotta build your will. Most people are missing something because they don't know who they are. They never examine themselves. They've never done this experiment on themselves. The lab rat, we're all lab rats, but you're also the scientist. You create your own self. Most people are missing something because there's so much trapped in there. I don't even want to say potential. I think that's a word just used out too much too. There's so much in you that God or wherever the hell you believe in, or if you're an atheist, in you that you have not unlocked, that you walk around with this gorgeous wife or great husband and all this money, like, God, I feel like I'm missing something. Yeah, because it's about 75% of you is still fucking in there. Still chained up because you just didn't want to find your willpower. Didn't want to find your soul, your will, your heart, your determination, your guts, your courage. And what that looks like, it looks scary. Like your little scary lab I went in. Scary. To wake up every day and say, I'm stupid, but I want to figure out a way to be smarter. Versus saying, man, I just can't do that. So you limit this box. So your box becomes so small of things you can do. My box wasn't even a box. It was a fucking little pinhole. And then through examining myself, getting some willpower, some courage, it became bigger than this table. But that's what we all do. That's why I wanted to come here today and talk to you about real shit. Why most people don't want to do that, build that willpower, is because it is scary. It unlocks a whole bunch of things about who you are and who you're not. And a lot of people don't want to go down that journey to discover who they are and who they're not. Because it's not a pretty journey. I mean, I've gone down it. It's not like I went down it once. I go down it all the time. And when you unlock that, and you can't just turn it off. Like people say, hey, well, how come you haven't retired yet? I built all this willpower. Do you think it's gonna let me just retire because my knees hurt? It's telling me every morning, I wake up like, man, my knees hurt, my legs hurt, my body hurts, but you can still run. So why aren't you running? If you can still run, there'll be a time when you can't lace them up anymore, but you can still run. So I still run. When the time comes I can't run, the body will say, you just can't run. But if I can still do something, that willpower that I have created, it makes me do it every fucking day. And that's what they don't get. What builds a human being is you start with the small building blocks. And before you know it, man, you become something that it doesn't even make sense to most people because it's just who you are now. That's why I can still run at 50 at 49 with broke down knees and broke down body. Because my body knows you still can. Therefore I do. Second you stop, the willpower is gone. You know why people connect with my book so well? For some reason, God put me in almost every fucked up situation on the planet Earth. So when I talk to people, it's not sugar-coated, because I'm not saying it from I was 175 pounds my whole life. I don't say much to those people. Maybe you're a piece of shit. Maybe you want to be nobody. Maybe you're happy exactly where you are in life, because obviously you are. Maybe you don't have the determination to be somebody better than who you are. And if you want to live with that, I'll support you in that. If you're good with being who you are, and every day you wake up and every day you smell like shit because you can't wash your body well, and your skin's messed up because your health's so bad, and you can't put your clothes on right, you need help with that. You need help, like when I was doing, I need help wiping my ass. That makes you feel good? Nothing I can say to you. If every day you wake up with this, see, people are haunted, but they obviously like horror films because they keep watching the same fucking movie. I don't like horror films. A lot of people like horror films. So I don't say much to them. I say exactly what I said to you, right there. Because I was once you. I didn't like horror films, so I changed it. Some people are just, they become, like you said, it gets real small when you're lazy and you're fat. Your will, their will is so small that they don't have any, and you can't give it to them. There has to be something. This is what I'm talking about now, because this isn't a hack. This has to be in you. Something in you has to wake up. And usually the only person that can wake it up is you. Sometimes you can read a David Goggins book because I was all this shit and then a lot more of fucked up. But if you don't have a little flame, just barely, you're done. I can't light it for you. And that's the harsh reality of this life that I want to get across so fucking bad. You can watch me, you can watch you, you can watch fucking Rogan and Cameron Haynes, all these motherfuckers. You can go to Tony Robbins's fucking bullshit, all this shit. You can do all this shit. If you could keep going back and keep spending money and spending money and spending money with no results.
We are live.
Go, wow, maybe let me go try out David Goggins. He ain't gonna fucking help you. You have to explore, examine the insides of yourself. And what do you really want out of life? Your friend, and a lot of people out here just don't fucking want it. So guess what? Have fun with your life. Go from 3 to 350 to 400 to 450 to 500 because you don't want it. And that's the harsh reality. I can't give you shit.
What's going on, chat? What's going on? Checking out the chat right now. It's Monday.
When I was losing weight,
what's good? What's good?
I had to miserably wake up.
Just checking out the chat right now. What's good? Where's everybody tuning in from? We're live here. Quick little session popping on.
This is your new life. Take it or leave it.
This is your new life. Take it or leave it. There's no happiness about it.
Peace behind it. It sucks. It just.
I think I've memorized this thing.
Fucking sucks. And that's
I listen to this when I'm running on the treadmill.
Anything.
That's David Goggins.
Fucking sucks.
This is a trip, nah. Real raw shit. It's like he talks about. There's no magic pill, no potion, no this. Real raw talks right there. Everybody always wants those motivational sunshine and rainbow talks. But what happens when what happens when the times get hard, when the going gets hard, when the phases get hard? That's all about mentality. The mentality that you have in those phases when you're not winning, or when you're on a losing streak, or when you blow an account, or when you're trading for 4 months and nothing's going your way. We could relate it to trading. A lot of it's mentality when nothing's going your way. Because when you're winning and everything's obvious and everything's going your way and you feel like you're in control, you're on top of the world and confident. But what happens when the tides change and you go through what happens when you go through like a 4-month phase of man, it's just not going right, the trades aren't hitting, I'm not winning. It's just what happens when you go through those types of phases. Germany, so we got, it's always Europe in the house. Dubai, what's good? So yeah, it's David Goggins in the background. When you're going through those tough phases, like, you know, I come on here live a lot and I see what a lot of you guys say in the chats and stuff. You need that harder mentality to push through and understand it's a learning period, how to sharpen, stay focused. We're on a winning streak right now. We're on a winning streak. Anybody who's been tapped in with the inner circle and the signals that I've been sending, we've been on a winning streak. We've literally smashed all the trades I've been sending lately. I think like 5 in a row now. Yeah, we won 5 trades in a row on gold. And before that, there were some losses. There were some wins, losses. There was 2 wins, 1 loss, 1 win, 1 loss, a loss, and then boom, 5 trades in a row. Anybody who's been watching me for the last like 2 weeks, maybe going on to 3-ish, there were some scenarios where bounced back. You saw some bounces back. There was one time we took a loss and everyone freaked out. The last loss I took. But since that loss was 5 wins in a row. Before that loss, there was a win. We're on a little win streak right now. You know, the strategy's been working. Just been focusing on the same strategy. Mainly for those trades. And we just tapped a solid trade last night for gold buys last night. And that one hit nice. That was a solid trade. This thing went up. Went up more after this. And then gold came back down. But that was the only setup I focused on. Only trade that I called out so far. Just taking it one day at a time. It is a FOMC this week. Big week. It's good on a week like this. Like, for instance, like FOMCs this week. If you can catch a good trade before FOMC, it's like keep that trade and wait till after FOMC. I don't really like trading FOMC week that much, to be honest. If like for instance, a good scenario on a week like this is if you can catch like a quick trade or a movement like I did last night. You don't have to trade so aggressively because it's like we caught that last night. Literally hit take profit 3, almost hit take profit 4. Like it came close. It hit. This thing hit like 42.18. It came up here. It kept going up more. Almost hit the last take profit level. Well, like on a week like this, if I can get a trade. Like FOMC week, I don't really like FOMC week, to be honest. And that's after 10 years plus of trading. I can say that. It's not like I've been trading for a year and be like, I've been trading for over 10 years and I don't like FOMC week. So I know that. So it's a week that I don't like to trade as much, to be honest. But if I can catch There's usually I'm able to find like a move before FOMC, and I like to just keep that, not look for too many moves before FOMC or during it, even like some cases, depending on how the market looks throughout the days. Obviously, there might be some clean setups. If there's a clean setup, I go for it, but I like to be cautious on FOMC week. because I've had a lot of FOMC weeks. I'll find some good trades before FOMC and then kind of like give it back to the market. That's what I've done a lot from experience. So if I can find a trade or two like before, if it's a good, like this is a really good trade, really clean like entry. Look at the entry. This is a great buy. Like this is a great buy structure. This like when you have this, I saw this shift in price and I was like, saw price came to 4,200. It tapped it. It ran through it, and then it made this big shift up. Like it made this nice shift up in price. You see 4,200 there. I have it marked on my phone here. $4,200 flat. You can see that's marked with the red line. I recommend like if you're studying the whole numbers, you're trading the whole numbers and the strategy. It works really well. Like I've literally won 5 trades in a row on gold. Like I'm talking like good moves. Like we've got like some solid moves, like some solid like take profits getting hit on all of them. Like the last trade, like look at this. This was on Friday. I had a lot of like, look at this move. Like we've had some freaking solid entries on the last like 5 trades. Like they've been solid entries. Like clean. All targets have been, like this was clean. This was clean entry. This entry. We've had clean entries. If you go look at all the entries in the last 5 trades I've sent out, just like some clean moves we've caught. That was the same. That was the beginning of that trade. There's been like some clean moves, like some bangers. We've caught some bangers. Like I'm telling you, like if we go back to all of them, we've caught some bangers. 5 in a row since like the last couple of weeks. I mean, like when you're using a good strategy, a good entry strategy, it's about the setup. It's about the setup. It's not about the amount of trades you take. It's about the setup, because any amount of money could be made on any trade. It's about the risk. It's about the entry. It's about positioning yourself in a high probable position that maybe you're used to doing, you're used to winning with. Having like a good strategy. It's not about the amount of trades. Like you could take 1 to 2 trades a week and be profitable, more or less. Any amount of money can be made on any trade. It's just about getting used to the setup, getting used to taking the setup, seeing the strategies. But yeah, today was even like a solid move. We've been catching some solid moves. 5 in a row. Like I said, it's not about the amount of trades, it's about the quality of the trade. It's about the quality of the trades that you're looking for. This was clean. Like I was saying, I saw this, again, we like to use whole numbers, and I was saying a tip I was going to say before, I rambled on a bit. A tip I was going to say is like if you're trading the whole numbers strategy, keep the levels marked on your phone. Like I do it a lot. If you look at different screenshots, you'll see I usually have like a bunch of lines usually on some of them. Some of them might have more or less lines, but I'm usually marking like, let me try to find a better example. Some of these don't have too much. I've showed this before. Yeah, some of these don't have too much lines, like what I'm trying to describe. Like this chart, I think I have like, yeah, like see I have different prices marked. So I'll mark the whole numbers on my phone. It's a good way to study. A good way to train your eyes. Like I'll keep them marked. I'll keep levels marked on my phone. Whether that's like $10 levels, $5 levels, or every $25. Just as a practice. Like I've done that obviously through my whole time of trading. Like this one has a lot of different lines on it, but yeah, like just like a basic example from recent. I recommend it. Like it's a good tip. Like what's this trade? Oh, this is it's the same one I was just talking about. Dirt here. But usually I'll have more. Like this is, you can see 42.25, 42.30. So I can mark like 42.40 up here, maybe 42.20. Like just having them marked, and not even the essence of trading, but just seeing it visually, like seeing things play out, like having your level marked. And you can see this trade was perfect. There's basically two types of setups I've been focusing on lately. One is like reversals, and one is like this. If you're in the inner circle, tonight we're gonna be live, so I didn't stream this weekend or anything, just chilled out. It's December market, so we're just being cautious this time round of the year. We're not trying to get overly over trading. We don't need to overtrade the market. Show up consistently through the week, learn the market, study it, so we understand the market more, adapt to it. It's December, and in like 2 weeks we have a lot of news this week. FOMC this week, so Jerome Powell is going to be speaking, big week. Next week a lot of news as well, and then we go into the Christmas holidays, New Year, that season. So there's going to be a period where there won't be a lot of trading. So we're going to need, at a point, it's good to slow down going into that and not overtrade your strategy. Just wait. I know, we have again, after all this, things really pick up again. And I mean, I think after middle January going into February, it's a better time. But yeah, take it one day at a time. If you're over trading the market, you're not seeing wins, take it one day at a time. Focus on a strategy. Focus on an actual entry strategy. I've been pretty consistent the last few weeks with our strategies that we use. So yeah, that's just me. If I'm not streaming, not going live a lot, it's because I just want to adapt to the market, tone out to the market. Because as good as it is to be on the charts all the time, you become way more self-aware when you're off the charts a little bit, but you're still keeping an eye on price. You're watching your strategy. You're watching your levels. You have your key levels marked on price, but you're not over trading. I like to have times it's good to do that. You become self-aware. You see times where you might have took a trade, might have not. I was able to catch an early trade off of 4,200 this week. Now we broke below 4,200, and we might try to come back and retest it. Yeah, the trade last night was pretty simple. It was in Tokyo session though. I mean, 4,200. What we use, we like to look at whole numbers with gold. Round numbers, whole numbers. For anybody who's new here, if you're new here, subscribe to the channel and check out the YouTube videos. There's a lot of videos where I talk about this stuff. If anyone remembers, a lot of you guys are OGs here. Maybe 60% of you guys are. Some of you guys might be more new. For instance, I started streaming literally last year. So I started streaming 10 months ago. So we really started picking up in the market. We started going over blueprints. When was that? January 9th. So kind of first week after New Year's. And we were streaming a lot. We're gonna do the same. That's how I'm gonna go into this year. That's why this time of the year I like to it's hibernation. I like to absorb my energy and sort of more propel myself into a newer season I don't really like January doesn't even feel like New Year. Like it really New Year for me feels like around like closer to like March and April, to be honest, for me. Like I know like 2026 New Year, January 1st, all that. For me, it's like really like I don't know, as a trader in the life I've lived and built over 10 years, like New Year's actually feels like closer to March for me. Like, well, like for instance, like I started streaming 10 months ago on YouTube, and that was the time we started really kicking things up, right? Like after that New Year, middle of January, and that's the same plan I have this year. Is again being active all January, February, March up until April, like I was last year. And I'm saying that because a lot of you guys here might have been on those, and those were some legendary times. Um, from January all the way till like April was like some legendary times we've had. I think in the year, like I've streamed consistently through the whole entire year, especially in the inner circle. Like in the inner circle, I think we've done like 300 streams this year. To be honest, maybe over. I know, like no, maybe like over 200, at least over 200. Like we've done a lot in the inner circle. In the year, there's been like three phases. There's been like three phases where we were really able to take advantage of the market, like three periods in the year. And that's where you may find success is like in different phases. Like you have obviously 2026, the start, January, right? You have January. I'll just put a J for January. And here, I'll write Jan. I'm going to write Jan for January. All right, Jan. And obviously, you want to trade and be successful next January, right? January 2027, right? You might have phases where you just perform better, or phases where the market is just like on your edge. You're on the edge. You understand the market more than others. Like for us, there was like three seasons this year where like phases this year where we were really on top of the market and winning. Like the first season was literally January all the way until like I would say April when things got crazy, like March, April. And then for me, May and June were a little bit shaky, I can say. Like I had a really good like January, February, March up until all the way until like April, I can say. And then I remember May, and it was in May, crypto was great in May, June, and July. Well, I'm talking about like trading, just trading. I'm not talking about crypto. I'm just talking like trading right now, like gold. I remember like May, June, the market kind of like changed a bit on how I was trading all the way from January till April. January to April, I was used to trading a certain way, and I was adapted to the market and on top of how the market was. I understood the market, was confident in the bias all through that phase. And I could say this period was enough to like, if I really like, I locked in, but if looking back, it's like if I really locked in, I could have made like the whole entire year just in that phase, just in that period. I could have made the most in here versus trying to do the most all the time, And I remember in May, June, things got a little bit more shaky. The market changed, started consolidating more, and it was something more to adapt to. And then July, I learned from that. It was like, okay, there might be phases in the year where it's like you go on a rough patch, maybe you go on a losing streak, you're up and down. You gotta learn from it. You gotta learn how to adapt from it. You can't be crying over it, get emotional over it. That was July. I learned from it, and then the next phase where things really kicked off again was like August until October. But there's been some periods where even like for myself where it's like, okay, I gotta adapt, I gotta take a step back, focus on the strategy, focus on things differently. Maybe you're gonna have that in the year, and so there's certain months where if you know what the market's really doing and you could take advantage of it, you might perform better than you did an entire 4 months trying to day trade every single day. But it's like going to be normal to go through phases where you may have to adapt. You may be used to trading a certain way, you might be like, because gold, for instance, is on a crazy uptrend this year. So you might have certain phases, conditions where you're used to trading a certain way. You're just used to going like this entire uptrend gold had from the end of August until middle of October. So end of August till middle of October. There might be a certain way you're approaching that market, and we were just buying. We were going. We were at it, right? We were always catching buys, buying the dips. And then you might have a time where things turn around, and you need to be like cautious of that. Obviously, like here things turned around, right? And if you're going at the same pace, you might ruin a lot of things. You might be going at that same pace, that same emotion, and those could be the phases that ruin some results, or even mess with your psychology, where the price turns. So we took some L's in there. I remember. I was super patient though. If you go back to October, when this was all happening, I barely called trades. I was very selective with how I was calling trades in there. But I mean, once the market kind of like got over all this dump, you've had a lot of stability. It would be the same thing for people that were looking for sells through all of this. It's like, okay, it finally came. There's their sells, but after this, the market regained some good stability, some good like moves on both sides, sells and buys, good buy setups, good sell setups. So going into next year, like I'm excited to see like more about like kind of how I started things last year. Like the first stream I did was literally like January 9th last year, and we were kicking rolling into it, the market. And so I kind of have that again. Like I have the same plan for going into this year. Bad flashback for you. This moment, yeah, like moments like that. I remember like this was a crazy moment, and the good thing leading up to that is we had some micro moments that we already kind of were involved in. Like leading up to that, there were some crazy moments where the market dumped. Once we saw this kind of happen enough times, we were always looking for the buy the dip in September. If you guys go back to the first streams I did from January to like maybe March, it was the same approach. And then it was that exact same approach I did there that I did all through end of August to October. So the same approach. I learned something this year with what happened in the beginning of the year. From January, I would think all the way until like March. When this came around, I was like, this is familiar. It was pretty much like reminded me of, again, like I was saying, like all of January up until like March, even beyond that. And something that ties into that is seasonality. Seasonality, we can look at that around this time of the year and maybe prepare. If you look at the gold seasonality chart, for instance, you have January, February, March, April. You could see April, May, June, July consolidate. You could see between like April all the way to like June, July, there's like a consolidation phase. This actually followed this really well this year. like January, February, March. So by March, the market's usually going up for gold, or by April at the most. So by March, usually gold is going up strong. And you could look at this over a 20, 30-year period. April, May is usually when it tops out. So like this year, like I'll put the white chart on. I like the black chart personally because like at nighttime it's just like better at nighttime. So 2025, you can see here. That's January 2025. April, May, middle of April going into May is usually when things kind of top out. You can see this year, summer months, going into those summer months, we had more, it was more of a neutral market, up and down, bullish, bearish, a lot of sells, kind of like what we've been getting like more now late. Like we've been getting some good sell and buy action now. There's been some good sells, some good buys on both sides, all in here. Basically like in the range that's been being created over the last few weeks. There's been sells, there's been buys. It hasn't just been like buy, or just sell. So if you look at this, you could see, so by April, like you could see middle of April, maybe to May, May, things can top out. By that time, by March, April, you're going up. Like by, March is here. April's up here. Still went up more. But overall, like a bullish season all the way into like May, April. You could say April, middle of April, close to May. And then you had consolidation months. And then you had another phase. You had like 2 phases this year where gold really ran. Beginning of the year, summer months built a huge consolidation. And then end of summer, July, August, September, October. So you had two strong phases this year with gold. One lasted pretty long and was extreme. This was fast, like months. You lasted some months of these. Like here, this went up for 49 days, almost 50 days. Now the other one was way longer. This went up for 110 days. Those are bull trends. Like overall, the market was in a bull trend this year for gold. Even the last 2 years. You go back to last year, it made the same pattern last year as well. Pretty much when you look at last year, 2024, and you look at the beginning of 2024 here, 2024, and then you go, here's middle April, kind of like before, same thing like April here. So you had your summer months more consolidating. And then you had like another bull phase that really kicked off in July. It started in July. It broke up in July and then way more August. So by March, by April, price had a pretty strong phase up. It's done it the last 2 years. So yeah, we're pretty much in here right now, right? With where the market is in terms of timing. Now, I'm not saying it's just going to rip up start of January. It could consolidate. The idea is going into March or going into April, prices pushing up. It's not. The idea isn't just buy beginning of January and hold. That might be harder than it seems. It looks easy going back, but obviously if you go back 2 years ago and you were to think about, let me just buy and hold, would have been a long buy and hold. Would have worked out, however, right? So is it a swing trade? Is it a position trade? Building up, something to think about, the planning behind that, and looking back at price, what it's done before. October made a low here. November made a low. December's lowest point. So let's go back to last year. And we can look at, like, this was November's lowest point, was it? Yes. And we have like a December low, a December low. The market held November's lowest point last year. The year before, it held November's lowest point as well, and December's lowest point. So when you look at this year, it's like, okay, so November's low is here. Lowest point. And there's a low here, but December just started, and it's now looking at this. This is a range now, like where we are now, and we have like a range in price. Does it come back to retest November's low later on? It could, right? There's still time and price, obviously, so it's like November has the lowest point. Can it come back to retest November's lowest point? That could be something to consider. It's done that the last 2 years pretty much. So the thinking isn't just like, let's just buy and hold going into January. Obviously, depends on how you're looking at that as a position. Because if you're just going into a day trade like that, that would have been a bit harder over here, right, to do. You would have had to have a really big stop loss, right, and then really, really hold, right? But there could be like that swing to catch still. Like last year started off pretty strong. So there could be some planning, some thinking behind it, like how you trade. Like obviously, it's nothing to overthink. You're just looking for good entries. Like where would you have bought? Like just how I've been sending my last signals, just looking for signals, sending regular signals, looking for good trade entries, and maybe trying to set those to break even. Maybe your winners, you just trade your regular strategy, look for good entries, look for solid entries. Try to let some of those winners run longer than others. Or since you know the direction of the trend, it's just like you have a bias of day trading through the weeks where it's just going up, and you can catch different trades along the way. When it's going up, hold some. Like this, like if you look at 2 years ago, price didn't just go up right away. It went up in like really February, March, but it still had that bullish seasonality. And then again, middle of April, price drops, it goes up, it drops, it starts consolidating. And that's what happened this summer, these summer months after April. So something to consider. November's lowest point is right here. So maybe we come back to test that, do we? Because we have time to until the new year. Or basically though, like literally I see it as like, if we look at last year, we're in this little pocket here. Like we're basically like, if you look at last year's price action, because October 30th last year topped out with sells, and then gold dumped. What happened this year? Literally October 20th, topped out and gold dumped. Last year, literally, if you look at the last 2 years, like it made the same. Like October 30th, that was like the same thing that happened. That was the same. If you were involved in this, if you were watching this, it was extreme. This was just as extreme. And then market had a huge rebound, chopped around, went on a pretty strong, fast bull run. And it's like, okay, market went on this rebound, came down. Yeah, like it could try to come back down, test the lows before trying to even like run up again. Look what last year did. Same thing. Weekly's looking bearish right now. Weekly at the moment, bearish candlestick. But yeah, gold after January, or we're going into January to February. I think I would say January, February, March is an interesting time to watch gold. So go study. Go study that. I know that banks have come out. We were talking about it the other week, where banks see gold going in 2026. We know the central banks have been buying gold. China went on like a 13-month gold buying streak. And we got the Fed meeting this week. Yeah, even silver's been on one. Price of silver significantly high. Look at that resistance silver has. Sheesh. Silver's just kind of chopping around up here. And then we have like a big retest area here on silver. Silver's extremely bullish right now, like extremely bullish. We've been looking at it since we've been talking about bullish silver when it was at like $30. Once it broke $30, I was saying this thing's gonna go up. Look at the price of silver. Silver's all-time highs, like finding all-time highs, touching against that resistance pretty much. You have a zone down here above $55, like 50s. Like literally it came above 50, went a bit below. It's like pretty much like when gold went to $4,000 and then went below $4,000 and it reclaimed $50. Now it's above $55, maybe trying to go to 60. If you look at this chart, looks bullish more than how gold's looking right now. This chart looks more like a bullish chart to me. This looks like it may want to try to break out. That's it. This is an interesting chart, silver. It's been just consolidating up here where gold consolidating next to this resistance. Silver looks more like a continuation. Gold's interesting. I'm going to be patient with gold this week. Like I said, it almost hit 75, I think. Like it would have been a good buy if it hit 75. It came super close. I was watching it when it was here and I was close to sending a signal, but it didn't hit the price. I wouldn't have been able to send out the signal. It was like too fast. It almost hit 41.75 this morning. Banks, you can look it up. Gold predictions, like I brought it up a few streams already, but maybe I can find some stuff real quick. It's more recent. Just go on Google, type in gold, banks predictions, stuff like that. You'll see different, because we've been seeing these types of articles since like June. Like, so there's been like, I remember when these articles were $3,600, like the targets of them were like, there's articles that have come out. Like, let's see what this one is. Like, for example, gold price prediction from Bank of America. This was more recent. Wait, yeah, when was this? A bit more. October 4th. This is a bit more recent. Goldman Sachs, for example. I think that was one that was recent that we looked at like in the last week or two. Like these articles, here's one from 2 weeks ago from UBS. Lifts 2026 mid-year gold price forecast to 2,500. Gold right now is trading at like 42s. Futures price is holding 4,200 still. You can see. So seasonality. Remember I talked about like some of these targets are mid 2026 or end of 2026 for a lot of these banks and stuff that I'm bringing up right now. Where did that R go? Oh, there it is. Yeah, from 4,200 previously. Swiss Bank sees more momentum rally. That's from 2 weeks ago. But I was saying, like, because I remember these articles June. There used to be articles that we would look at in June. Like, here's one from June, JP Morgan research that we were looking at. We would look at this stuff in June when it was like price was going to the 38s, or even before June, like before price got to like some of the prices we're looking at now. Why gold prices could soar another 20% in the upcoming year. We looked at this on Bloomberg. There was, let me see if I can find it more from markets. Rolex to gold bar. Let me see if I can find it. When was this? This is September. If anyone was streaming like last week or 2 weeks ago with me, yeah, it was 2 weeks ago. I just found it. I have it on. Yeah, here it is. We talked about this like, yeah, November 2026. This was something this was like so Goldman Sachs, this guy was talking about how they see gold prices rising 20%. And he basically said they see the same thing happening in 2026 that happened in 2025, just not as fast. And because of all the same reasons as to why gold went up in 2025. We looked at this 2 weeks ago. But you can find articles like all over now, like that are from months ago that talk about gold going to 3,800, gold going to 4,000, 4,200, or 3,200. It's crazy. Some say 10,000. So with that being said, and well, I just broke down on the charts too. Just went over a lot of stuff there about the seasonality the last couple of years. And we've been comfortably kind of just trading above 4K now for a bit. Bears came in strong. Like, people were really bearish on gold for a bit. And I mean, now there's been some good selling and buying opportunities. There hasn't just been like hard sell. It hasn't been like hard sells to find. Like, there's been easier sells to identify. You gotta think. I'm looking probably for like some swing trade between that season, just something to hold. Like, it could be any trade. That's the thing. Like, I was talking about this in September on a lot of streams, because in September, all the way until like end of October, the market was just going up, and I was just sending signals, like regular signals, and a lot of those signals could have just been, a lot of those trades, like, could have just been break-even trades. So it's like, when it could be any trade. It's not like, you know, a magical trade that, like, oh, like, I could just be looking for good solid entries with a strategy, good reasons to entry, and if those trades go into profit, maybe setting them to break even more than you're used to try to catch that swing. What month? September 9. Yeah, see, look, I've been ripping signals since, I'm trying to scroll back to September here, and I've been scrolling for a minute here, and now I just hit September. So September market, look, I just got to September. That was me. This was me. I sent a signal while in the desert. I just found, yeah, I'm back in September. This was, oh yeah, I remember this. I literally sent a signal while in the desert. And GG, literally sent a signal in the desert. Wow, this was me. I'm in a car sending a signal. That's when you know you've reached peak fucking trader level. When you can freaking, look at I'm wearing seatbelt and everything. Guys ripping it in the sand. You guys got to hear this though. Wait, let me turn the volume up.
Okay, don't start, yeah? I will stop in another place, what you see.
Yeah, perfect.
Yeah, perfect. Fucking olive oil. Okay, I will stop in it. That guy was ripping it, bro. Yeah, fam. Like, GG. Let's remember that, alright? Who remembers that shit? Look at this guy. Who's that guy, yeah? Yeah. Sent a signal in the desert. That's why, man. If you're not in the inner circle, you're missing out. There's been some crazy experiences this year to learn from. So, literally, September starts here. Let's see where we were buying in end of August. End of August, we were buying at 34.10, 34.07. For example, we were buying in the 3400s at the end of August. So let me help you understand this for a minute. End of August, we were buying at, damn. It's like, okay, could have held one trade, two trades, or caught as many trades as I did. There's something that we're gonna talk about multiple things here, but August 29th, let's find where we were buying at 34 what? Just so I can get a starting point. I want to get a starting point. 34.10, 34.07 area. So 30, oh my gosh. No way. I'm fucking on it. GG. No way. Right there. You've got to be bloody kidding me, lad. So, for example, it could be any trade, really. Wow. Bro. All right. I didn't think it was going to start off like that. I thought it was going to be like another trade, maybe a couple trades, but maybe I can I'll probably find a trade before that too. I probably could find a trade before that then that we took down here somewhere that hit take profit and probably could have been a break-even trade. So I'm using end of August, September as an example because remember, that's when the seasonality really kicked again. Remember that seasonality that I was talking about, wherever that went? That's when it really picked up back again this year. And we're maybe expecting that this year for January, February, March. Like, for instance, we were buying gold, day trading it through September, through the week, buying it. that was one of the first trades I called. Like that could have been a break-even trade, for example. Let me find another entry that might be higher up. So it's like, for example, I could have just held this trade, but I am finding more trades inside of that uptrend to maybe compound some growth along the way. That one hit full take profit because look at where the next signal I send at is 34.75. So way higher up actually. 34.7, not way higher up actually. 34.75. The next signal I send is right here at this line. So it's like it could really it takes the right market or even seasonality, really, the right trend to hold something. It's like I need maybe a good reason trending. This year we had a lot of news and geopolitical things and tensions and conflicts that added to the trend really on gold. A lot of geopolitical concerns and things and still tensions. It all still is there, I think, and that's why gold is calmly kind of just trading above $4,000 right now. One moment. Just doing something. Give me a minute. Give me a minute, chat. Give me a minute, chat. I'm on the phone. All right. So, for example, next trade I sent would have been this break and retest. Like I was on this. Literally, I sent a trade here. And it's like, you know, regular trades following my strategy. So it's like, for those of you guys that know, that's literally our strategy. Like for those of you guys that are OGs here, and those of you guys that maybe have been in the inner circle for a few months, if you've been in the inner circle for at least a few months and you've been on sessions, watch videos, you should be able to understand kind of you should be able to look at these and be like, okay, I see something there maybe. That was one of the trades. But look where I was buying, for example. Look at this. Where was it? The trade. Damn, we smashed that trade. Holy, look at this thing. The eagle has taken off. That's when I knew this thing was gonna go up. 34.10, 34.07, right? I could have held that one trade and who knows how much I would have made, right? But it can be just any trade following your strategy. Like there's a break and retest here. It's good I remember this stuff and I can literally see my strat. I can go back and literally see my strategy here on signals I've sent, right? I can see the high here. I got $3,400 level, break and retest above that. That trade would have hit full take profit. For the day, like for the time being, it was literally a day trade we caught that was like this. Literally like a day trade we caught. And was out for the day. Done for the day. Like if you're trying to go for even trying to go for a swing trade from my experience, like because I day trade gold through the week. It's like if it's the right phase, the right trends coming, it's like it could just be following your strategy. And putting some of those trades just to break even, because I can look back at this year and there was a lot of trades I could have put to break even. It would have made a significant difference. The next trade literally is, again, break and retest. Boom, right there. So like, look at those prices I could have been holding, swinging realistically, like just following regular strategy. Boom, that was 2 in a row there. Next buy was literally 35.45. And that thing like literally there's been several times where I've won good trades in a row where we've had solid entries that they've been day trades. Like this one hit our full take profit, 300 pips. That was at 35.50, 35.45, 35.45. So that's going to be up here. All right, where I'm catching an entry. Basically, it was following the pullback. I was going with the trend. Might not look as clean as the other entries, but that was in here. And this thing hit full take profit for 300 pips. Like, and we were out for the day. We literally had a 300 pip move, and we were out for the day on this trade. And it's like, okay, that's an example of literally 3 trades I took that I just showed you signals, literally signals that I sent in September. Back to back to back, all 3 winning. That I was taking for the day, for that day, for that time, and they could have been swing trades. The reason I think they could have been is because the season, the market was following that strong seasonality. Central banks were buying gold. There was a lot of demand for gold, fueling more, and there was a good uptrend. It'd be some swing. Like lately, the market's been more up and down, up. Some strong moves up, down. But it depends how you look at it, because it's like, okay, I caught 3 different trades. It's like, would I have made the most money just holding one? You can think about it like that in a way of like pros and cons. Like, okay, if I just held one trade, I wouldn't be as more exposed to risk going forward. Because, okay, one trade that could be a potential winner. I'm not taking 2, 3, 4, 5 more trades after that one. So I'm not putting on as much risk, essentially. Maybe not as exposed to the market if one trade. But like, for me, it's not overthinking when you're trying to catch swings. It's having a good strategy, following your strategy, and letting your winners run. Trying to let your winners run. If you overthink it, I think it won't work out. Because from my experience, I've had the best trades are when I'm just following my strategy. We just won 5 trades in a row, literally. In the last 2 weeks, we starting coming into December, we've won 5 trades in a row. And since last week, in the last 8 since December 1st, we just won how many trades have I sent? Now, I don't know how many trades have I sent in the month of December, because I know we just won 5 in a row. Some lost, some won. Where's December begin? Like end of November's right there. Yeah, November 30th, we had a trade there that hit take profit. This one hit stop loss, 1 win, 1 lost. Here's where... Yeah, this one... here we go. So, since last week, yeah, we lost this trade. And then we've won 5 in a row since that one. Yeah. Even some of these trades could have just been, held... Even some of these, not all of them, but could have been just, held a little bit longer compared to, the take profit that was hit. And the market went more beyond that, a few of them. So I think if you're looking for swing trades like that, you could even make a swing trade account, because you could day trade, get in and out kind of thing, and there's always going to be another setup. The market's always going to give you another setup, another opportunity, right? If you're trying to swing trade things, having a swing trade account, maybe separating the account style. Because there could still be day trades available. Look at, I caught some day trades in the last few days, in and out, not trying to just swing. I caught 5 wins in a row instead of looking for maybe just one swing trade to hold. In that holding time, what if I'm holding for 3 days? What if I'm holding for 4 days? What if I'm holding for a week or so more? or 2 weeks, 3 weeks, a month. In that holding time, I might be able to find more than one entry, right, within that holding time through the day. Day trading. So it's looking at the position as like, okay, I can take one position, hold it for a week. Yep, make money. The risk there is like, okay, win or lose, it's one trade. If I'm taking one trade a week and I'm trying to hold it for 3 days, catch a swing, there's less risk exposure there because you're not taking the frequency of trades is weekly. It's like, okay, that would be 52 trades in the year if you did that once a week. If you took one trade a week, you're taking one trade a week and you're trying to hold it for 3 days. But in that 3 days of holding, or whatever, you might be able to find different entries. So it's like, what if finding different entries, you try to hold them to break even every time, and one of those entries could be that 3 day swing. So it's like you're planning when you're trying to catch a swing or maximize. It's called maximizing on your profit. You would just have to put your winners to break even then. Because think about it. It's either, okay, most people who try to swing trade and catch a big take profit, it's like, okay, if I take one trade and I put my take profit there, wherever, 300, 400, 500 pips, I'm telling you and showing you in the time that you're holding that one trade for 3 days or whatever, or till its target, you could probably find 3 different entries. And maybe one of those entries hit that same target. Maybe 3 different probabilities. That's usually for me what it's like. It's like if there's a swing trade available, it's just going to be like my regular strategy, my regular trading. Set that to break even. So I don't try to swing trade a lot with gold because gold gives entries every day pretty much that you can get in and out of. Like this was the entry I had today on gold. It gives movements like this every day. Every day. So these movements can add up. So I'm not always worried about swing trading it. Maybe more around this time of the year now. As we go into, that's why I was talking about what I talked about in this session. All right. Maybe this time of the year. Yeah, look, like we got pressures mount, Trump and Israel guy, Gaza peace deal advance scheduled to meet on December 29th at Mar-a-Lago, where the U.S. administration plans to apply direct pressure on Israel to transition to the next phase of Gaza plan, even if the body of fallen soldier Ryan Will is not returned. This was posted today. So it looks like, yeah, Benjamin Netanyahu is slated to depart for Florida. So during the holidays, good old crypto always open. All right, that's still going to be like holidays, right? December 28th, December 29th. I don't know. Oh, that's on the weekend, of course. Okay. And then I'll see how that goes. I know there's like Russia, Ukraine, even talks about Europe and a lot of other stuff going on if this even escalates. Gold weekly right now, like it might be trying to break that 4,200. Looks kind of sketchy right now. I don't know. Look at the last few days have just been like kind of choppy here. The weekly looks bearish at the moment. Last week rejected bearish, so weekly might be trying to come down, to be honest. Looking at the weekly right now, it looks bearish at the moment. We had like a small rejection weekly candle last week, and this week Maybe goes with that momentum. Daily doesn't look the cleanest. Basically just been like sitting on this high. So right now we're below 4,200. Like that's pretty much like a key level right now from what I can see. It looks like it just kind of tried to pull back to it too. Like it almost hit 4,200 not long ago, like a break and retest. Yeah, for like, it could try to reclaim 4,200 like on the daily or 4 hour, like maybe a later day this week. Like if it were to push above 4,200, very strong. Maybe it's like 4,220 or above, then it's like, okay, it could probably pull back to 4,200, then go off of it. Right now it's below 4,200, so it might try to have some bearish moves down below it. Came close to 41.75. So if you look left, like we're just in this range. We're in another range again, like 4,200, 41.75. It could try to tap 4,200. That's the thing. It could try to tap 4,200, have a move down. It's pretty much doing price is literally pretty much doing what it did right here at this moment. And it's pulling up. At least same candle, same spot. So it depends on price structure. Like if this holds and breaks up, then it's like, okay, maybe we're gonna get the same thing. If you look to the left here, this is what I'm talking about. You can see this rejection here, and then eventually we sort of just break above 4,200 and we retest it. So I mean, if you're looking for buys, maybe if it can break above 4,200, because right now currently it's like below like this 4,200 area, so it could try to push back down. There's more days to look at it, more times to look at gold throughout the week. Like I didn't look at gold for New York session today. I just chilled because caught a really good move last night. I just chilled because my entry was literally right here on this candlestick, so I caught buys right here. Used 4,200 again. Just right timing, right price and timing. Just right time, right price. 4,200 level. So for me, it was like Sunday night, market made the move. It was literally pips away from our take profit 3 or 4. The last take profit level was right here. So almost hit our take profit like to the fullest. And again, like simple setup using, again, I was using a whole number. Same rules, same setup, same discipline every single time. Not overcomplicating it. Using the whole number. There was a nice rejection, but the structure shifted. The structure shifted well. So that was literally today's entry. We won 5 in a row. So I'm trying to keep that going and pace the setups out. Look for good entries. It's like, okay, for me, if you guys look, when I said, like, we won 5 trades in a row, but you know, we get some take profits hit. We were literally pips away from our full take profit. I'm not trying to jump right away to the next trade. You know, it's like, okay, take profits hit, market's moving. We had a good reaction. We were in a profitable situation. I'm not trying to jump right to the next trade. This was literally our entry for the start of the market. Stop loss at the low. Bam. It hit take profit 3. Take profit 4 was at 42.20. Almost. It was super close. So now it's just like waiting for the next setup. We're below, like you could have used 4,200 this week I used it there. Notice the market came to 4,200, it tapped it, and then it went through it, but it still ended up reclaiming it. This is where most traders lose, is here. Because they'll get in the buy, and then price will drop against them, and then they'll be like, oh my god, I'm wrong, what am I doing? And then they'll get out of the buy, and then the market will go back up, and then they'll get in the buy again, and then it becomes emotional trading. And you got to really understand these levels, because this type of stuff can happen. Stuff that might influence your emotions, where liquidity grabs, price sweeps. I talk about this a lot. Like, you can see how price first arrives at 4,200, goes down, almost hits 4,190, and then punches up, reclaims 4,200. So the levels can always be used furthermore. Like, for instance, like when you look at over here to the left at 4,200, you have a nice sell rejection here. Some nice sells there at that level, and price breaks above that level, right? What does it do? Comes back. Funny enough, we were already in a trade. We caught, this is where we caught a trade. We caught one of our last trades was literally right here. But price breaks above the level, and you could see, like, there doesn't have to be a rush. Like here, not the most perfect reaction, but price did draw for liquidity, and you could see, like, this level could have been used again. Now, even to the left, like, you can see it could have been used here, here. Here, price breaks below it. So here, price breaks the level. That's again where it's like staying patient again. Where it's like if you're in a situation where you take a trade at the level and it loses. Win or lose, it's not jumping to the next trade right away. Win or lose, whatever it is, wait, try to wait, let the market reset, wait for that recovery or wait for that next level. Like, you could see multiple times where this level could have been used, even if you didn't use it at the right times. Like, let's say you bought here, right? Or you bought here. Well, there's no rejection on those candles, first of all, too. Like, you don't even have rejection there. So where are the areas where price actually reacts? Like, when we look at price, like here, there's some signs of rejection candles. Here, these ones are too big, so it might have not been easy to catch a trade there. I think I was live that morning. Oh yeah, was I? Furthermore, like, there's different times the level could have been used. Like, I used it here. You could see, like, early this morning, like really early this morning there. And if you were lucky, maybe scalping there. It's actually, price has actually touched this level quite a bit of times. It hasn't been the most perfect level, but I was able to find a really good trade just keeping to it here yesterday. But I didn't buy right when the market first came there. I just waited till I saw something that, like, triggered, like, me. Like, I missed this candle. The 4 hour also closed bullish, but it was really that reclaiming the level, price shift up. So, like, same type of setup. That, again, same type of stuff I break down a lot. Right now, I don't see a trade on gold. Like, usually I find my trades in late Tokyo session. They're usually around the same times. It's not usually these hours. Usually it's a late Tokyo session. So a bit before London session. Or London session. Or New York session. Like early New York session. Usually my trades are around the same times. A little bit of price, timing. I mean, if you just buy at price, there will be trades that work. If you can just buy when price hits or you see a little bit of reaction, it will work. But there's going to be trades that you can go, like if you look at this, if you look at these over here, let's say you're taking buys here, there really is no rejection candle there. So that's a bad trade. If we were to say what's a bad trade, like a bad losing trade, because like a losing trade doesn't always have to be considered a bad trade. Just like the strategy didn't work. But here it's like, if we're looking at that whole numbers, like, so the idea isn't just buying and selling at the whole numbers, but that can work. It can work if you just buy and sell it, like, but if you're looking at like a bad trade, it's usually something like this where there's no rejection at the level. Right here you can see some more reactions. So I mean, it's like one price level that you could see, like there's been multiple reactions, but there could have also been some losses depending on how you took the trade. Like if you were just buying at price, like right here, see that little wick where I just marked, like let's say you were buying there, you saw price react quickly, like oh my god, I gotta get in, you might have took a stop loss or an L, right? So it's not just like clicking the button right when price gets there. If you can look at a certain time frame, like a 30-minute or a 1 hour, and see a certain type of rejection or reaction pattern, then that could be way more higher probability, because this would be a bad trade. Like if we took a trade here, that would have been a bad one. Here. Furthermore, you could see some areas where it actually shows like some green candlesticks. But like, yeah, like buying right off, like it can work. Like see here how price literally just taps the level. So like it can work. I've seen it too many times. Forex.com. Yeah, you gotta use forex.com. Forex.com. Yeah, weekly's looking yeah, that weekly candle's looking bearish for gold, so I think this week might try to drop for maybe until FOMC. FOMC could change things. The weekly's looking kind of bearish. Yeah, like pretty bearish at the moment. Daily looks ugly to me. The daily looks ugly to me right now. Like yeah, the daily candle's just starting to look pretty ugly at the moment. We'll see after FOMC. Like I said, I usually don't trade so much FOMC week, or I don't try to predict too much on FOMC week. Rate cuts are supposed to be coming. When rates go down, gold gets stronger because yields. And we've talked about this before plenty of times. We were talking about this back in September. Let me see if I can find it. Those screenshots, but when the interest rates go down, money starts to flow into gold. That's why gold's already been also pushing up, because it was like known that the interest rates are going to go down. Bump, 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 bump. Ooh. Yeah, gold is probably like already ahead. Like gold's price movement is already ahead of like the rate cut decision. Well, especially like the first one that was happening, like the first rate cut that happened. Remember, there was a rate cut September 17th that week. The rates got cut in that week. Gold was already starting to go up a bit before that, and then even afterwards. So we're supposed to be getting rate cuts this week. I don't know if that's just going to trigger gold to start going up, but you can see gold is pretty much just ranging now. It is kind of just sideways. Like we actually have like a range on price now, sideways on the weekly here. So it's looking interesting. So yeah, when rates go down, it's usually positive for gold. Can ask here rate cuts for gold. Rate cuts this week, impact for gold. Markets are widely pricing in a roughly 25 basis point rate cut by the Federal Reserve December 10th. According to the CME FedWatch tool and major brokers, the chance of a rate cut is around 87 to 90%. So why, here, I'll put it in Discord. We'll see. We got rate cuts this week. I'm going to write this in Discord. It's easier. Instead of just saying it out loud. Someone called me a scammer in Discord. Y'all gotta not be sarcastic like that. Some people can't read sarcasm. One moment. So we're going over some important, boring information today. All right, there's that. That's what the rate cuts do for the dollar too. If dollar weakens too. If we get like a weak dollar because of the rate cuts afterwards. Yeah, so gold is a non-yielding asset, unlike bonds or saving accounts that pay interest. So lower interest rates reduce the opportunity cost of holding gold. This tends to push demand and price up. But a lot of forecasts say like gold's already kind of ahead of its move. Like it's rallied. Like we had rate cuts already here. We knew more were coming, so that's why it's rallied more. So it is easing a bit. But with more of this easing still kind of happening, it could create another rally. I would say before mid 2026, like go in 2026. And with central banks continue to buy gold, global uncertainty, slower growth, inflation, all this stress, the still present gold has structural tailwinds beyond just the rate cuts. So just we got rate cuts. It's one thing. But like just beyond the rate cuts, there's uncertainty. A lot of stuff. Global uncertainty. Yo, you guys gotta see, yo, these posts. Any of you guys see my ads lately? Yo, these people are hilarious. These people make me laugh. Yo, I gotta say, you guys want to see some fucking? You guys want some entertainment? Yeah. Here, we're gonna wrap it up. I gotta get going. Yo, go to this post and read the comments. Right here. Go read the comments. These people, yo, these people, where do they come from, bro? Go read the comments. Go read the comments. So yeah, aside from rate cut, I just put where I put it, pip and dip. Oh yeah, here. Aside from that, yeah, like central banks been buying gold, global uncertainty, slower growth, inflation, fiscal stress still present. Gold has structural tailwinds beyond just near term rate moves. Yeah, like what happens this week, it could pump up, drive down, but we'll see. I like to wait till after FOMC. FOMC, like I said, not my favorite week. Yo, go read those comments. You need access to scanner? I'll add you after this. I added some people last night. A lot of people have access. I added some people last night. I gotta add some people who have commented. I added a few people last night. I gotta add this. If a lot of you guys have access and still don't know you have access. I've added a lot of people. 490 people. So there's still people missing, but I've added a lot of people to this that have commented on this post. Where did my TV go? There it is. A lot of you guys have access and keep asking me for access. And if you go to your indicators, it's on invite only. It's on invite only. You have to use it on forex.com. If you pull it up, it's not going to be on Oanda. Only works on forex.com. Someone just bro tagged my mom. Like, who does that? Yeah, so indicators, invite only section. It's a really good tool to train your eyes too. There's also alerts, but one moment. How many notifications do I have here? If you go back on like replay mode, you can look at other ideas that have happened, played out, and you could, it's a really good scalping tool. Really good scalping tool, like to help you understand gold more. Like, look at this movement, for example. Like, so here we can see like a distribution with price. We can get an idea too, like even if you don't take the trades too, and like you don't catch them all in real time or anything, you can go back and like super train your eyes with this thing to understand like certain movements in the market to better prepare yourself. Like, there's a solid entry right here. You can see that happened today or wait, that was last night. Invalidation. I broke it down. I posted a YouTube video breaking this thing down. It's meant for scalping, because like we'll try to find a lot of different reactions on gold, so it's meant more for like scalping the market with these types of areas. Quick reactions, in and outs. Now, you know, once price reacts, it makes a decent movement, getting like in and out. A lot of you guys, first steps, fam. First steps. Well, like, first steps. First steps here. I don't think a lot of you guys even watched this video in first steps. Go here if you're not in the Discord. If you're not in the Discord, go to this first steps section. I have to wrap it up though for the day, guys. We've been on for a bit. We talked about a lot of information. Talked about a lot of info today. We're going to be on later. I'm going to be in the inner circle later. Tonight, so for Tokyo session, I'm going to be on later tonight in the inner circle. If you're in the inner circle, I'll drop the link in Discord and in school. And I'm going to be back on tonight for Tokyo session, talk about the market. I don't really have an FOMC prediction. I'm just going to let FOMC do its thing. Probably not even try to trade it. If price dumps, I'll probably end up looking for buys, to be honest. If there's like manipulation, liquidity grab, and so yeah, but probably just gonna chill, gonna keep it chill this time around. Like last FOMC, like price, it's not like price went up right away, like, or anything. If you're looking for a buy, last FOMC was this wick here, right there. There was a huge liquidity grab there. Last FOMC created a wick, right? Literally a fake out grabbing all this resistance here. That was last FOMC move on gold. It had spiked up for the first like 15-20 minutes, but then dumped down and started going down, but created a buy at the end of the week. So you had like this huge wick created in the first moment. So if you're chasing buys or sells, you could, you know, get something like this on the FOMC potentially. And that's why personally I just try to like avoid it. Like I don't really trade that always. I like to wait till after. More so. Last FOMC provided this is a good strategy. Like usually in the first 15-30 minutes, the market makes a fake out on the news. So this is like a fake out reversal strategy. And then it kept going down for the rest of the day, the next day. But towards like the end of the week, Thursday, Friday, it found a huge reversal. So yeah, like we're already, like, I mean, it's Monday, so the market's going to move tonight before FOMC. We're already making like liquidity at the bottom and at the top. We're just kind of consolidating. So I'm going to wait, stay patient this week, but still going to stream and be on the charts and just look at price and see what's going on. But I'm out. I'll be on later. If you're in the inner circle, like I said, I'll post the link in school. If you're inside of the inner circle, I'll post the link in school and in the Discord chat for those of you guys that are in there. But that's going to be it for today. I'm going to wrap it up.